With President Trump's executive order allowing 401k plans to include crypto, private equity and real estate, retirement investing is entering a bold new phase. As crypto adoption grows, with billions flowing into digital assets and institutions increasingly diversifying, investors are rethinking traditional strategies. Is this the future of retirement planning or a high-risk gamble? Aaron Tang, country manager from Luno, Malaysia, with me on the line right now. Aaron, thank you so much for being with us today. First of all, what's your initial reaction to President Trump's executive order allowing 401k investments in crypto and other alternative assets? Do you see this as a game changer or mainstream adoption or a risky move for average investors?
Morning, Harriet. Thank you for having me again. It was really a pleasant surprise, especially since it came from the federal level, because up to this date, several of the US states, some of the pension funds has adopted Bitcoin at the state level. But this one came from President Trump, so it's a federal level thing. I think it's really a game changer for mainstream adoption. And you know, the fact that Bitcoin has come a long way from, I would say, quite a niche asset class to something that is recognized today in retirement portfolios, that's really a game changer. I just want to point out one thing on the 401k retirement scheme in the US that's slightly different to the Malaysian EPF, although there are similarities. Unlike the EPF, where the very experienced professionals here locally, they manage the funds for us. In the 401k in the US, they actually give choices for the investors to decide what to invest in.
Yeah, Aaron, from Luno's perspective, how ready is the average investors to include crypto in long-term retirement strategies like 401k? Are there educational or regulatory gaps that need to be addressed first?
All right, so just going back to what I mentioned earlier, I think in Malaysia, the really defined retirement plans, for example, EPF and so on, I would say that the portfolios in those retirement funds, that is already decided by the professional fund managers and so on. Now, that being said, Malaysians, we can choose for ourselves, oh, I want to invest in, say, some stocks, in bonds. That is my own personal portfolio. So I think regarding that, it's actually happening already. So many Malaysians, more than 1 million Malaysians on Luno are already investing in crypto. Now, some of these probably investing for short-term gains, some maybe medium-term gains, but I'm pretty sure some of them are also investing for their retirement. Now, in terms of educational regulatory gaps, I think the amazing thing is that financial advisors today, people who have licenses to actually do financial planning and financial advisory, they are also recognizing and understanding crypto digital assets in investment portfolios today. So basically, if people need advice on, okay, how much should I be investing in Bitcoin, digital assets, and so on, you can actually reach out to a financial advisor. And I think financial advisors will actually be able to give you some very good pointers.
Aaron, what unique advantage do crypto assets offer that traditional investment like stocks and bonds might lack, especially in the context of long-term wealth building?
The one very interesting thing that digital assets, especially Bitcoin, has proven to show that is actually a very efficient diversifier. When we talk about investments, we want diversification because we don't want all our investments to move in the same direction. So for example, when the market is going up, all our investments go up. When the market is going down, all our investments go down. We don't want that. What we want is diversification. So regardless of market conditions, hopefully our portfolio will overall be doing well. So I think that's really, Bitcoin has proven to be a great diversifier. And when I say diversifier, I don't mean that people need to invest a huge amount of their portfolio into Bitcoin. It could be 1%, 3%, 5% of their portfolio into digital assets. I think the other really cool thing about digital assets is they offer 24/7 trading. They offer almost very quick settlement. So for example, if I were to sell my digital assets today, I should be able to get my Malaysian ringgit back into my bank account within the same business day.
Aaron, maybe can you share examples of data that show how crypto has contributed positively to diversify portfolios in recent years? Are there specific coins or strategies that stand out?
Sure. Thanks, Harith. Would you allow me to share my screen? Just I want to pull out some graphics here.
Yeah, sure.
Yeah. Okay. Cool. Just give me a moment and let me just share you some very interesting graphs. So I hope you're seeing my graph.
Yes.
On the screen here. Yeah. All right. Thanks, Harith. So this is a bit of a complex graph, but we'll start right at the bottom here. I hope you can see my cursor. So this is a 5-year graph. This is a 5-year graph comparing the performance of 3 very, very well-known asset classes. So from basically 2020 to 2025 August, this graph was taken yesterday. The top line here, you see the line that's quite dramatic, moving up over time and achieving a gain of about 900%. That's Bitcoin. That represents Bitcoin. So basically, if you had invested 1,000 ringgit into Bitcoin 5 years ago, today you would have roughly 10,000 ringgit. Now, the 2 lines down here at the bottom, they represent SPX. SPX represents the 500 largest stocks in the US. And then the other line represents gold. They've done actually very well as well. So SPX is up about 90%. Gold is up about 72%. So if you invested 1,000 ringgit 5 years ago into the US stock market or gold, you would be up about 1,800 ringgit, 1,700 ringgit. Now, the thing to remember is that Bitcoin, it has volatility as well. You can see that it goes up and it goes down. But over time, if you look at it on a longer term asset, you can see that the trend before this has been going up. Now, I want to caveat this by saying that past performance is never a predictor of, or rather it's not a predictor of future returns. We cannot guarantee that this will happen continuously and so on. I'm just saying that historically, it has proven to be a very, very interesting asset. Now, I want to move on to my next slide, which hopefully will bring the point further. So this is a diagram showing the performance of asset classes every year. So for example, we start at the left-hand side. In 2013, Bitcoin was the best performing asset class with about a 5,000% gain. Gold was not doing well in 2013, negative 29%. And then we have a couple of other asset classes, for example, the US stock market, bonds, and so on. Now, this graph actually very interesting because it shows you that Bitcoin has been the top performing asset class for most years over the past decade and so on. You'll see that Bitcoin at the top here. There were times when Bitcoin had a big drawdown as well, when Bitcoin performed negative 58, negative 74%. But you'll see the cumulative return, the annualized return, they are very, very attractive. Now, I want to go back to what we mentioned about portfolios. When we talk about investment portfolios, I think no one who is actually creating portfolios is saying 100% Bitcoin or invest all your money in Bitcoin. Rather, it is a measured approach to building portfolios. So whether that's again 1% into digital assets, 3%, 5%, this differs. It varies for different people. But I think it's safe to say that Bitcoin has established itself as a mainstream digital asset today.
Mm-hmm. Aaron, maybe you can tell us more. What are the biggest risks of including crypto in retirement accounts, and how can investors mitigate them? Is volatility the main concern, or are there deeper systemic risks?
Yeah, volatility is definitely one of the concerns. As you can see, the graph goes up, the graph goes down as well. I think that typically can be mitigated in 2 main ways. Number one is to have a size that is comfortable for volatility. Again, some people that's maybe 3%, maybe that's 5%. The second thing is to have a longer time frame. So I think some people may be very, very excited for short-term gains, but again, Bitcoin digital assets, we have seen that they are a bit of a longer term game. Now, the other thing I want to mention is that some of the early adopters had problems safekeeping their digital assets. So maybe if you rewind back about 10 years ago, people were not as careful as storing their digital assets. We hear horror stories of somebody stored it in their hard drive and then they threw the hard drive away, and then today that hard drive is worth like 100 million. So I think today the landscape is very, very different. Today the industry has grown up. We even have licensed custodians, right? So even if you do not want to store the crypto yourself, the digital assets yourself, you can work with a licensed custodian right here in Malaysia. They can actually store the digital asset for you. So safekeeping, I think we are moving definitely in the right direction.
Aaron, I think this is the most and crucial questions to you. How do you respond to critics who argue that crypto is too speculative or unstable for retirement planning?
I just want to say that retirement planning is a very individual thing, right? For example, let's say somebody in their 60s, somebody in their 70s, maybe digital asset, Bitcoin is not for them. I'm just saying maybe it is for them. So I think the main ways to mitigate some of the volatility that I've mentioned is, again, time frame and also sizing. I think historically we've seen that having a 1%, 3%, 5% allocation, historically over periods of say 3 years, 5 years, and so on, it has actually enhanced the portfolio really, really well. So yeah, I think that there is an element of volatility that always needs to be recognized. But there's a quote that I really love. The quote says that volatility is the price you pay for performance. Volatility is the price you pay for performance, meaning that if you're looking for bigger gains, most likely you're going to come with higher volatility.
Aaron, in about 1 minute of our discussion, what does a well-diversified portfolio look like in today's investment landscape, especially with the inclusion of digital assets?
Yeah, definitely there have been a couple of very, very well-recognized papers in the industry now showing the benefits of a 1%, a 3%, a 5% digital asset allocation. And usually they mix it between traditional 60% stocks, 40% bonds, and they take a few percentage points away from the bonds. So perhaps it becomes something like 60% stocks, 39% bonds, 1% digital assets. Or 60% stocks, 35% bonds, 5% digital assets. Now, again, this is a very, very individual thing. Everyone will manage their portfolios differently, but the literature out there has shown historically that some of these portfolios that I mentioned have done really well.
Aaron, thank you so much for your time. Aaron Tang, Country Manager, Luno, Malaysia. All of this will be available in our website and also all our social media platform. Thank you so much, Aaron. Sekian saja Niaga Awani untuk waktu ini. Saya Haris Ashraf Aslan. Kita jumpa lagi.